One of the biggest challenges in real estate that I hear today from people is they want cash flow and they're not sure how to get it in today's market. So, in today's episode, we're going to look at some different ways to get cash flow today. I'm Kathy Fettke, and welcome to the RealWealth Show.
You're listening to the RealWealth Show with Kathy Fettke, the real estate investor's resource.
Joining me today is Leah Collich, our director of our RealWealth Realty and also one of our investment counselors. Leah works with investors every day, helping them evaluate deals and deciding what strategies make the most sense for their portfolios and for their goals. Leah, welcome back to the RealWealth Show.
Always good to be on, Kathy.
And you're always a headliner because you get so much information from speaking with some members of RealWealth every single day, and you know what they want, you know what they're doing, you know where they're investing, where they're not investing. So you just come with a wealth of information, and I'm so happy to have you here.
Yeah, I get the benefit of being a fly on the wall of the success and the trials of investors of many different varieties. So it's good to bring that information to the show.
Yeah. And, as a company grows, it used to be me doing that. And I used to be so in touch with our members. And, as you grow, I don't get to do that as much. So you are the person bringing that information to me as well, not just to our listeners. So thank you.
Got you.
So let's talk about some confusing topics like, should I buy cash flow? Should I just look for growth properties? Do I get both? I literally sat down with somebody who's somewhat of an expert on BRRRRs, the buy, renovate, rent, refi, repeat, that whole thing. And she said, yeah, you can still do it, but it's going to be probably $100 a month negative cash flow in the market I'm in. And I thought, gee whiz, that's a lot of work for negative cash flow when you could buy turnkey properties through us and get cash flow and not do the work. So help me, if you would, tell us what you think is important, cash flow, growth, or both.
I mean, obviously everybody wants both, right?
Yeah.
When I ask people on calls what they're looking for, 9 times out of 10, they're saying both. And me too. Who doesn't? But the reality is that you oftentimes do have to prioritize one or the other. And what you choose to prioritize, I think largely varies based on your time frame and your specific life scenario. For example, I was talking with a client not too long ago. He's either 91 or 92. Cash flow is very important to him. Like he doesn't care about the appreciation, and he has a goal. I need $6,000 a month, period. That's it. So for him, obviously, we're not looking to use as much leverage in many cases. We don't want him to have a bunch of doors either at 91 years old.
Yeah.
Whereas if I'm talking to someone who's in the prime working years of their life, making great W-2 income, killing it at their day job, they don't need the cash flow today. In fact, they probably already have a tax problem. So maybe the last thing they need is more cash flow. So they could, tailor their portfolio a little more aggressively towards some appreciation and delay some of that instant cash flow gratification. So it really depends on what your specific situation is and what you're trying to create in what time frame.
Oh my gosh, this is so important in every area of life. People give advice on how to diet, how to exercise, and it's literally different for everybody. Everybody's body is different, and everybody's portfolio is different, and age is different, and goals. And so there is no one solution for everyone. Let's take a person with you just dealt with this recently, somebody with a big problem, a terrible problem, having to sell a property that they had for many years in the Bay Area. Worth $3 million. Okay. Terrible problem. But it is when you're doing a 1031 exchange, because how on earth are you going to find properties within 45 days that are going to add up to 3 million? So what is that person looking for?
Yeah. I mean, they're looking for scale, right? They need volume. When we have clients come to us who are, in the middle of these large 1031 exchanges, and maybe I should quickly kind of define the 1031 exchange in case there's someone listening who doesn't know what that is. A 1031 exchange is a tax deferment strategy that allows you to basically realize the gain. So sell a property, take the profit of that property without paying the capital gains tax, provided that you put that capital into subsequent properties. You roll the gain forward. And so for the client that you're referencing, she had a very, very large 1031 exchange. And so we had to identify a lot of replacement properties. You have to replace at least the value of the relinquished property. In her case, also, she was trying to prioritize cash flow. And ultimately, what she decided to do was use less leverage, right? She, again, was kind of entering those golden years and wanting to kind of scale back on effort in her life and things to do. And so we actually looked at a bunch of multifamily inventory, duplexes and quadplexes, and she was purchasing them with actually 50% down, knowing that it would create a little bit more efficient cash flow for her in the near term.
Yeah, I mean, I might even buy some outright and then leverage others. I don't know, but it's different for everyone. That's the important thing to remember. So at what point should an investor be reevaluating their portfolio, and if they should stay put, buy and hold forever, or if they should potentially reassess and maybe 1031, like you said, into higher performing properties?
Well, this is where I think it's so critical to be doing regular evaluations of your portfolio. Every year, at least, you should be sitting down and reflecting on the performance of the investments that you currently have. In my mind, there's kind of two most common, what should I call them, glaring lights in when it might be time to do something with your portfolio. And that is if you have lazy equity. So if you have a property that maybe has appreciated a lot and the cash flow maybe feels good, but really the relative amount of cash flow to the amount of equity that you have there is pretty poor. So I encourage people, take a look at lazy equity, calculate your return on equity, look at how much cash flow you're getting for how much cash you have into the deal. And the second one is identify poor performers. If you're not tracking and reflecting on which one of your properties are constantly requiring you to feed them $100 bills, you might be missing an indication that it's time to move on to something else. Obviously, we all like the idea of a 1031 exchange, because we have equity and we can grow the portfolio. But I've had this in my personal portfolio. I've done a 1031 exchange because the property was painful and I needed to get rid of it and get into maybe a newer, nicer property.
Yeah, sometimes I look at it like, okay, people tell me all the time, we're in California and we hold California events, which we're having one come up. So we'll talk about that in a minute. I often will tell people, yes, you're cash flowing on your California property because you have no debt on it, or your debt is super low and it's doubled, tripled, even quadrupled in value. So if you were to look at that property as, would you buy it today at today's price? And for the rent that you're getting on it, would it make sense? And always the answer is like, no way. Like, why would I, again, using the $3 million property, probably making $5,000 in rent, you would never buy that property today. So I just look at it that way. Like if you are making that $5,000 a month on the $3 million property and we were able to help you double, triple your cash flow, would you do it?
Right.
Of course, even if it meant getting a higher loan or higher interest rate, if you're going to increase your cash flow and potentially appreciation and diversification out of one property into several in different markets potentially.
Right. And let's not forget, Kathy, like you and I, like we like the passive investing strategy, right? We don't want to go and acquire a bunch of additional jobs as we grow our portfolios. And I actually had a conversation with a client here just the last week or two. She is doing a 1031 exchange out of a short-term rental that she operated herself in San Diego. Very high priced property. Just her principal and interest alone was $4,000 a month. And then when you add on taxes and insurance and all the cost of furnishing and operating and cleaning a short-term rental, she was negative cash flow on the property. And she was noticing a trend of declining revenue year over year. It was less and less profitable. And so at some point she started saying, okay, I'm desiring to be passive. This isn't cash flowing, as it is now anyway. And so she
what
actually,
am I doing?
Right. What's the point? The equity's nice, I guess, but it's not working for her. And so she sold that property in San Diego. And she's doing a 1031 exchange actually with our Alabama team. She's getting 2 new construction homes and 2 fully renovated homes. And, the the size of the portfolio is about the same. I think it's a little bit more expensive, the value of all the replacement properties, but her cash flow, I mean, she's going to cash flow projected with maintenance and vacancy overages about $12,000 a year. And she's got a property manager now, so no more having to do guest communications and all the headaches that come with operating a short-term rental.
Businesses are built on helping people. If you can solve a problem, you have a business. And I'm telling you, what you just said is what makes me passionate about this business, is seeing people's lives change from, burdensome, this is hard, I'm working too hard and not getting the results I want, versus, wait a minute, I don't have to really do anything except the initial work of finding the right properties that are better than the one I have. And now I'm more passive and making more money, and to see the light bulb go on for people, it is just, and to see their lives change. Like I said, people have quit jobs. Like, wow, I don't even need to work anymore because this one 1031 exchange, this one move has changed my life and doubled, tripled, quadrupled. I mean, and you can't even, how do you go from negative cash flow to 12,000? What kind of percentage that is that? It's a lot,
Yeah.
I'm sure you feel the same way when you're helping people and seeing their lives change.
Oh, yeah. And so much of it is just, I mean, even podcasts like this, I mean, it's just that the spark of an idea, like planting it in someone's mind that it's possible to change your scenario. It's possible to change. And then more importantly, showing people how it's possible. And that's what, we obviously strive to do here at RealWealth. And that's why we're actually hosting a live event on October 11th. We're doing a virtual all-day event dedicated to 1031 exchanges and kind of demystifying the process of how you can take properties that you already own and maybe reposition them into properties that allow you to be more passive and have more cash flow.
And even if you're not in a position to do a 1031 right now, I think it's really important to attend this workshop because you might be someday. And planning is planning. If you're not planning for tomorrow, you're not planning for next year, you're planning, hopefully, for your life. How do you want your life to be? And I mean, even our Dallas team, they're all about, this is the plan. You're going to hold it for 2 or 3 years and you're going to go and plant more seeds. You're going to take the money out of the properties that you bought and made money on, and you can use that money to buy more and keep planting more and more seeds. That is her business plan and how she helps people. So, just understanding the 1031 and how that can help you avoid legally avoid massive taxes and grow your portfolio. It's important to understand, even if you don't need to do it right now.
Right. And we're going to have some multiple experts in attendance at the event. We're going to bring in a tax expert to talk more broadly about the tax benefits associated with owning investment property. Of course, we're going to get into the inner workings of the 1031 exchange. But as you alluded to, we're actually bringing 3 of our most popular property teams to come and present inventory, including the team that I referenced, who's helping that client with the 4 properties in Alabama. They're going to be presenting. So Alabama, San Antonio, and Dallas are all going to be presenting at the event. So it's going to be beneficial whether you're already looking actively for a 1031 exchange replacement portfolio or whether that's in the future for you.
Real estate can be really hard. I want to make that so clear. I had lunch with a neighbor who, I won't go into too much detail, but a friend came and said, hey, I got a great deal on a property. Do you want to go halvesies with us? And they said yes. They put a bunch of money into the deal and it was the wrong deal. They lost it all, bottom line. And now it's a lawsuit with a friend. So people real estate seems so fun. It seems like you're getting a puppy. And then I've said this before, then all of a sudden you come home, you have a new puppy and it's just destroyed your home, right? You've been through that a few times, I think.
Yeah.
But that's how we kind of can casually take real estate. Is like, oh, you found a good deal? Oh yeah, let's do it together. And then it becomes your worst nightmare. So that is not how you want to do real estate. It can also not be hard. Right? It can also not be hard. What would you say is the difference between hard and not hard?
I mean, I think it's a lot of who you know and who you have, helping you do it. The strength of a property manager, I think, is pretty critical to your success. You can make some mistakes on the buy and give the property to a good property manager, and they can probably make it perform. On the flip side, you could do everything right on the buy, and if you give it to a bad property manager, it's going to be very painful, as you described. So I really think the power of who you're working with, it really matters. And so, identifying that core property manager that really has your back when challenges happen, because they do. It's inevitable. There's going to be some destruction at some point if you're doing this for any length of time. So having a good person in your corner mitigates some of that damage.
But it's really important to know that a property manager cannot fix a bad property, right? So we've had that before, where people come to us with properties they bought on their own. They didn't really know what they were doing. And they're like, can your property managers fix my problem? It's like, they may not even want your problem. They may not want to manage your problem, because they would rather pick out the property that they want to manage, right? If they're stuck with it, you just get to do the first initial work, buy it. They have to deal with it. And they don't want to. We've seen property managers go down because they took on properties they didn't want and they would have never picked out themselves. So, don't think that your property manager can fix your mistake, right? How many times have you seen that?
Oh yeah. Yeah. It's definitely a scenario that I've heard before.
Yeah, many times. Okay. So how can people find out about our upcoming live virtual event?
So they can go to realwealth.com/1031. Registration is live up there. Again, this is a free virtual event. So no matter where you are in the country or the world, you can attend it. And we will be recording it and sharing the replays with everybody who registers. So we'd love to have everybody in attendance.
And again, even if you don't own property yet, even if you don't have property you want to sell and exchange for different property, this is an important piece of your strategy. Even before you've started, understanding it is so key, because if half of your money is going to taxes, it's going to take you twice as long, if not much longer, to get to your goals. But when you can postpone that, that it's the same with IRAs and 401ks. If you can postpone paying the taxes, you're building wealth along the way. You can pay those taxes at a later date or not at all. Again, things you can learn through the 1031 exchange and to the tax benefits we'll be talking about. Will we be discussing anything on bonus depreciation at this event?
Yeah, we are bringing in our go-to tax strategist, who's going to talk broadly about real estate investing and how it can be tax optimized. So I know he plans to touch on cost segregation and depreciation and bonus depreciation. So it's definitely something you won't want to miss.
Definitely don't want to miss. All right. So Leah, thank you again for being here on the Real Wealth Show and sharing your wisdom.
Of course.
And thank you for joining me here on the Real Wealth Show. Again, if you want to sign up for our virtual event, it's coming up October 11th. Just go to realwealth.com/1031. Make sure to subscribe so you never miss an episode. I'm Kathy Fettke. Thanks for joining me here on the Real Wealth Show, and we'll see you on the next episode.
The views and opinions expressed in this podcast are provided for informational purposes only and should not be construed as an offer to buy or sell any securities or to make or consider any investment or course of action. For more information, go to realwealthshow.com.